Welcome, curious minds, to the deep dive. Today, we're plunging headfirst into a really big question, one that seems to be shaking up the global financial system. Is the Fed truly dead?
It's a provocative question, isn't it?
It is. And we're going to explore why, according to our sources today, the answer is maybe a nuanced sort of. And crucially, how this moment potentially impacts, well, everything from your digital assets right through to global power structures. Our mission today is basically to distill the key insights from Simon Dixon's Bitcoin Hard Talk, episode 94. This deep dive should help you quickly get a handle on the week's big shifts across Bitcoin, macroeconomics, and geopolitics.
And this all comes from Simon's live stream on August 22nd, 2025. That was broadcast on his YouTube channel, but also out to X and Rumble too.
Right. And for those who might not know him, Simon Dixon.
Yeah, he's a well-recognized Bitcoin OG, known for his often long-standing insights into the financial system, digital assets. He has a knack for connecting dots that maybe aren't immediately obvious.
Okay. And one concept he brings up a lot, which we should probably mention up front.
Yes, throughout this analysis, Simon frequently refers to what he calls the proof of weapons network. He paints it as this powerful, interconnected web of financial and military interests. He believes it shapes global events, often for profit, and sometimes, at the expense of individual sovereignty.
Got it. That's a really crucial lens to keep in mind as we go through this material today. So we'll break this complex landscape down for you into 3 clear segments. This week in Bitcoin, then this week in macro, and finally this week in geopolitics. We'll try to connect those dots and hopefully reveal the bigger picture. Okay, let's start this deep dive. All right, let's kick off with Bitcoin. It's been on quite a ride this week, hasn't it?
Definitely a roller coaster. It shot past $116,500 after Powell's comments seemed a bit dovish.
Then corrected back to $112,000.
And then bounced back up towards $117,000. Volatile stuff.
But Simon Dixon argues this isn't just, standard market swings. He ties it back to what he calls the debt-based Ponzi scheme, saying it's just repackaging and rolling over its debt. Can you unpack what Simon means by that phrase, debt-based Ponzi scheme?
Sure. So Simon uses that term to describe the existing financial system. His view is that it constantly needs to expand, taking on new debt just to pay off the old debt. The core insight he offers here is that if you're close to the money printer or if you hold fixed supply assets like Bitcoin, you tend to do okay, you benefit.
Huh.
But for many others, it leads to what he rather starkly calls debt enslavement.
Wow. Okay, so he sees Bitcoin's price moves as deeply linked to the sort of inherent instability of that traditional system.
Exactly. Even Bitcoin feels the ripples.
Interesting. Now, shifting focus slightly, China made a surprising move, didn't it, despite their long-standing crypto ban?
Yes, CMB International, a Chinese firm, is now the first to launch 2047 Bitcoin and crypto trading.
Simon sees that as more proof of Bitcoin being this unstoppable force pushing against state control.
He does. But he also flags concerns about the increasing financialization of Bitcoin.
Right, like the news about Gemini, the Winklevoss exchange, pushing forward with their NASDAQ IPO plans.
Precisely. Simon views this trend where early Bitcoin companies go public as, in his words, banksters and investment banks trying to securitize and financialize everything. His warning is that this encourages you to own shares in their companies rather than holding the actual Bitcoin yourself in self-custody. It's about shifting ownership.
Okay, so owning exposure versus owning the asset.
That's the distinction he makes. And this push extends to stablecoins, too. Simon highlighted Tether appointing Bo Hines, who used to be with the White House Crypto Council, as a strategic advisor.
And how does Simon interpret that move?
He sees it as clarifying the U.S. strategy, a real push for stablecoins. But he views these stablecoins critically, potentially as tools for surveillance and social credit scores. Because they're backed by national debt, in his view, they just prop up that debt-based Ponzi scheme instead of moving towards something like Bitcoin strategic reserves, which he advocates for.
And he mentioned something called the Genius Act.
Yeah, he pointed to that act, which allows banks to use Fed reserves for stablecoins as another step chipping away at the traditional Fed system. He even draws parallels to historical figures like JFK, who challenged central banking.
So it sounds like a strategic maneuver to keep control, just using newer tools.
That seems to be his interpretation.
Okay, and speaking of control and maybe alternative interpretations, Simon has a pretty strong take on Strategy, the company formerly known as MicroStrategy. He called its approach a potential PSYOP. That's a provocative term.
It is.
Can you unpack what he means by that? Especially since Michael Saylor has bought so much Bitcoin for the company.
Right. Simon acknowledges Saylor's massive accumulation, over 650,000 Bitcoin now. But his argument is that owning exposure through a public company like Strategy is fundamentally different from self-custody. His core point is that public companies are ultimately owned by Wall Street. He names BlackRock, State Street, Vanguard, and they're subject to those institutions' agendas. He points to Strategy's MNAV, that's the premium investors pay per share over the actual Bitcoin value it holds. It's dropped from 3.4 times down to 1.58 times.
So you're paying a 58% premium now.
Yeah, a 58% premium to get Bitcoin exposure through those shares instead of just buying Bitcoin directly. Plus, Saylor's revised guidance for issuing more shares, the MSTR Equity ATM guidance. Simon says that introduces dilution risk. That's totally different from Bitcoin's fixed supply, right?
Right, dilution versus fixed supply. A key difference.
A fundamental one, in his view.
So, while it looks like a pro-Bitcoin move on the surface, Simon suggests it might actually undermine some core Bitcoin principles and potentially centralize control.
That's the concern he raises.
So the consistent advice from Simon Dixon for you, the listener, is pretty clear then.
Absolutely. Hold your Bitcoin in self-custody. He argues that's how individuals drain the swamp and protect themselves from this proof of weapons network using peaceful proof of work.
And he offers resources for that.
Yes, he mentions a free self-custody guide and an 8-module course with Andreas Antonopoulos on his website, simondixon.com, for anyone interested in learning more.
Okay, let's pivot now to This Week in Macro. Simon Dixon makes this really bold claim. The Fed is dead. And in his view, the U.S. is essentially taking Europe down with it.
It's a stark framing.
It is. And a major factor he points to is the impact of tariffs. He used Berkshire Hathaway's Q2 results as an example.
Yeah, showing that 4% drop in operating earnings and nearly a 60% plunge in net income blamed directly on tariffs.
And Simon challenges the way people usually think about tariffs, doesn't he?
He really does. He argues they're not free money from other countries. They're import taxes paid by American companies like Berkshire, Apple, Nike. So those companies either have to raise prices for consumers or they cut costs, often meaning workers. This shrinks corporate earnings, and interestingly, he argues it drives consolidation.
Consolidation. How so?
Because larger companies can weather the storm, while smaller, distressed SMEs get bought up. He believes this is part of a deliberate fiscal dominance strategy.
Fiscal dominance. That's the idea that government spending and debt policies are now more powerful than the Fed's monetary policy.
Exactly. He thinks this strategy is being used to strategically weaken the dollar, push capital out towards BRICS nations, and ultimately help create a more multipolar world order.
Wow, that's quite a theory on current economic policy.
Yeah.
And he sees this playing out in international trade deals, too, specifically the new U.S.-EU deal.
Yes, he views that deal as reinforcing what he calls a vassalization strategy.
Okay, vassalization. What does he mean by that in this context?
So Simon defines vassalization here as the process where a dominant power, the U.S. in this case, effectively makes other nations or blocs, like the EU, subordinate to its own economic and strategic goals.
And the terms of the deal reflect that, in his view.
He points to specific terms. The U.S. puts 15% tariffs on most EU imports, while the EU gets rid of tariffs on U.S. industrial goods. Plus, the EU commits to buying huge amounts, $750 billion of U.S. energy products, $40 billion in U.S. AI chips, and EU firms have to invest $600 billion in the U.S. by 2028.
That sounds very one-sided when you put it like that.
Simon's analysis is blunt. He calls it a disaster for Europe. Good for U.S. companies, he says, and it furthers what he sees as BlackRock's vassalization project. And this ties back to the Fed is dead idea. This fiscal dominance, he argues, is killing traditional monetarism. The Fed's losing its power to steer things as the dollar weakens.
So if the Fed's power is fading, what's filling the gap? He mentioned the reverse repo market.
Yeah, the Fed's reverse repo market dropped to its lowest level in 1,596 days. He interprets that as liquidity leaving that supposedly safe parking lot and moving into treasuries, maybe signaling a real squeeze coming.
In Powell's recent signals.
Simon argues Powell basically caved, signaled a potential rate cut in September, even though the data might not really support it. For Simon, this proves an alignment between the FOMC, the big banks, BlackRock, and maybe even Trump's agenda, and the result. The dollar's weakening, falling below $98.
So it's all interconnected in this view.
Very much so. He even points to things like the DOJ investigating Fed Governor Cook, suggesting it could be part of a humiliation ritual to destabilize the dollar, show the Fed isn't independent. though ultimately he thinks they all work for the same banks and proof of weapons network.
And this path leads where, according to Simon, he mentioned MMT.
Right. He suggests this could pave the way for stablecoins to bring in modern monetary theory, or MMT.
Right, MMT, the idea that governments that issue their own currency can just print money to fund spending.
Yeah. And he connects this to political figures like J.D. Vance, who he notes is Peter Thiel's pick, possibly being lined up for a 2028 presidency focused on a surveillance state and universal basic income.
Which sounds appealing to some, but Simon sees downsides.
Huge downsides, in his view. The costs. Inflation, mass surveillance, social credit scores. He brings up his line, every accusation is a confession, comparing it to critiques of China's system.
That is a sobering outlook. The final big piece in this macro picture. BlackRock.
Absolutely. The announcement that BlackRock CEO Larry Fink is stepping in as interim WEF chairman, Simon reads that as massive. He basically positions BlackRock as the de facto proof of weapons network CEO, orchestrating these vassalization strategies, advising the Fed and Treasury, holding board seats everywhere, influencing via ESG. It's all part of the picture he paints.
Okay, finally, let's shift to this week in geopolitics. The big headline, of course, was the Trump-Putin summit in Alaska.
Dominated the news cycle, yeah.
But Simon Dixon's analysis, again, cuts through the noise. He argues, quite simply, when you follow the money, the meeting changes little.
Right. Trump called it a 10 out of 10, but then admitted, one or two significant items weren't resolved. And Putin's comment that the war would not have happened under Trump, Simon suggests that plays into a carefully crafted narrative.
And the follow-up meetings with Zelensky, various EU leaders.
Simon views those leaders, von der Leyen, Merz, Macron, Meloni, Starmer, essentially as puppets for the proof of weapons network.
Yeah.
He points out Trump initially made economic threats if peace talks failed, but then softened his stance. For Simon, it just highlights the transactional nature of it all.
So his core takeaway remains the same.
Yes, it's not about peace, it's about money. He frames this whole sequence as part of BlackRock's larger vassalization strategy. The outcome he sees. Russia gains territory, Ukraine gets forced into talks over its resources, and Europe gets weaker.
How does that vassalization actually play out for Europe in concrete terms, according to Simon?
He points to some stark numbers. U.S. weapons exports to the EU apparently tripled between 2020 and 2024, reached almost $118 billion in 2024 alone.
Wow.
He argues this enriches the U.S. military-industrial complex, but it depletes Europe's own stockpiles and its independence. It effectively turns the EU into, his words again, U.S. POW puppets.
And he suggests direct interference, too.
Yeah, he alleges U.S. interference in European elections, Romania, France, Germany, to basically ensure leaders stay pro-U.S., anti-Russia, anti-China, aligning Europe with Washington, even if it hurts Europe's own economy. He notes that some EU officials apparently fear becoming a battleground where the U.S. just drains their resources, talent, and autonomy.
That's a grim picture for Europe. What about other regions? He talked about the Middle East.
Yes, significant shifts there, too. He suggests Israel's long-standing role as a key channel for U.S. military funding is now shifting more towards Europe. He thinks the global power dynamics have fundamentally changed, that the proof of weapons network isn't bound by old nationalistic ideas anymore. It's about a pure financial industrial complex and technical industrial complex profit-driven agenda.
So the Middle East is realigning.
He sees it moving, perhaps counterintuitively, towards more unification and decolonization, but by aligning with BlackRock and this financial complex. It marks the end of the post-WWII model for the region. And controversially, he adds, Zionism being turned into a toxic asset in this new framework.
That's a really significant reinterpretation of what's happening there. He also addressed the situation in Gaza.
He did. He mentioned the heartbreaking news of famine being officially declared there by UN-backed monitors. Undeniable, he stressed. And he cited a classified Israeli military database reportedly showing 83% civilian deaths, 53,000 Palestinians killed, only about 8,900 identified as militants. Simon labels this whole situation an Operation Blame Shift, and even hints at possible infighting between different factions within the proof of weapons network.
And other regional moves supporting this realignment idea.
Yes, things like Saudi Arabia and Syria setting up a joint investment fund, Egypt training Palestinian police officers, Jordan bringing back military service after decades, major European funds divesting from Israeli firms. All these pieces, for Simon, point towards a major shift away from old alliances toward this more independent, multipolar world order that he keeps talking about. #outro.
So after all that, what does this actually mean for you, the listener? We've taken a deep dive into Simon Dixon's Bitcoin Hard Talk, episode 94. We've seen how his central idea that the Fed is dead or dying connects seemingly disparate things.
Yeah, from Bitcoin's volatility to this macro-level restructuring of economies through what he calls vassalization and these huge geopolitical shifts that are uh, literally redrawing the map.
Simon presents this not just as news analysis, but almost as a blueprint for what might be coming.
Exactly. So in a world where financial and geopolitical power seems to be undergoing this fundamental reset, the question he implicitly asks is, what one proactive step will you take? How can you enhance your own financial sovereignty and protect your assets from these big evolving systems?
And Simon Dixon offers a pretty direct, provocative call to action, doesn't he? A path towards individual sovereignty.
He does. It's quite clear. He urges people to boycott the Fed, use Bitcoin, boycott BlackRock, hold your assets in self-custody.
Boycott the banks, aim to be debt-free. Boycott the big global corporations, spend locally.
Essentially, choose a peaceful, decentralized monetary system. That, he argues, is how you reclaim your sovereignty in the face of all this.